Not all, actually, interest rates play an important role, as you well know, but it's also the European approach that is very different from the US one. So here we have, obviously, from a demand side, also a certain problem here in Europe, because there's a lot of regulatory change in the market with respect to new construction and renovation.
So when it comes to the outlook, what do you expect to play out from here? Because these complex mix of events are not changing. We still have the rate scenario to play out. We still have regulation. We still have the impact of raw material costs, which a lot of the companies are reporting is not abating as much as they would like at this stage. And we know wages are remaining sticky. So what transpires from here on these markets? Well,
we at Wienerberger, actually, we assume that these markets won't get any better right now. It's a sluggish environment, to be honest, and we will see a weak building environment in the next 1 or 2 years.
Heimo, good morning. I just want to touch upon the renovation activity and renovation demand. Has it picked up in this particular quarter?
No, it has not. The renovation, also from a perspective, if you look at the different countries around Europe, is under pressure, because obviously the availability of money for people is not there. Affordability is an issue when you talk about renovation, and especially state funding programs have come to an end in certain areas, so we need a stronger approach by the European Union if they want to achieve their 3% renovation rate in order to get the Green Deal done.
And we'll talk about, of course, how you are working towards sustainability and your efforts on that front. But I just want to touch upon an important market which has been sluggish for you, which is Eastern Europe. That continues to be the case?
Yes. Obviously, Eastern Europe has already suffered last year. You remember interest rates were much higher than in the Eurozone. I talk about Poland, 15, 16%, also Hungary, 18% interest rates. So here, literally, it came to a standstill, the new residential housing market. We will have it still this year. I think it's flattening out at a low level, but again, here we will see hopefully some growth next year already.
Just want to get a sense of how you're thinking about the business and the trajectory, because it was late last year, in November, you were planning out for 3 years, which I think, given how difficult the events have been, to see out for 3 years is quite a huge effort anyway. But now we've got very difficult conditions. You're also talking about stepping up cost management as well in the business. Just how quickly has the environment changed, and how dynamic do you have to be now versus what you're anticipating in November last year?
Perfectly honest, it's a crazy world, to be honest. Last year we were actually putting extra shifts in to satisfy demand levels at this very period of the year. Today we have to cut back on production. So you are absolutely right. We have to be very flexible, very quick in adjusting to demand levels. It's about 3 months to 6 weeks thing in the different markets, but we need to be really very quick in implementing and flexibilizing our cost structure.
Just on the cost side, we were talking to Continental yesterday. It did strike me the amount of extra cost they're still seeing through the business. What are you witnessing? Where are you seeing some cooling in terms of those inflation pressures on prices, and what's still remaining elevated at this stage?
Well, keep in mind, inflation is still pretty high. Wages, as you mentioned, are still up in around Europe. So
and that's not going to change, right?
That's not going to change. I see the environment around 6% around Europe, the inflationary cost increases also for next year. So we will remain in this territory for a while.